Hi guys. Today we will analyze Amphenol stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. However, recent evolutions are not positive. The short-term trend is neutral, while the long-term trend is still negative. We need to see a little more continued positive action to open a long position. Support levels are around $73.50 and $71.80. The next support levels are around $68.50 and $66. Resistance levels are around $77 and $80. The next resistance level is around $82. In the last month the stock has been trading between $71 and $77 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 3 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since December 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 12% per year, for last 5 years. We see that the average profit margin of the stock has been around 13% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 99% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Amphenol Company: bad, average, and good. First scenario. Amphenol will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 5%. Future profit margin would be low, 13%. Future free cash flow to net income rate would be low, 70%. In this case, the fair value of the stock today would be $29. Second scenario. Amphenol will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 6%. Future profit margin would be average, 14%. Future free cash flow to net income rate would be average, 80%. In this case, the fair value of the stock today would be $36. Third scenario. Amphenol will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 7%. Future profit margin would be high, 15%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $45. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 2.51. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Amphenol, analysts forecast growth rate around 7% per year in next 5 years, and future P/E around 26. Again, I will use 3 different scenarios for Amphenol Company: bad, average, and good. First scenario. Amphenol will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 5%. Future P/E would be low, 16. In this case, the fair value of the stock today would be $22. Second scenario. Amphenol will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 6%. Future PE would be average, 18. In this case, the fair value of the stock today would be $28. Third scenario. Amphenol will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 7%. Future PE would be high, 20. In this case, the fair value of the stock today would be $33. As you can see, today the stock is overvalued, $75, even if we expect the company's high performance in future. The fundamentals are decent, the company has solid cash flow and a strong business model. While showing a small growth rate, the stock is too expensive at the moment. I'm not interested in the stock until it drops below $45. Company's strengths. Amphenol is a major producer of electronic and fiber optic connectors, cable and interconnect systems such as coaxial cables. The company sells its products into diverse electronics markets, including military-aerospace, industrial, automotive, information technology, mobile phones, wireless infrastructure, broadband, medical, and pro audio. Operations are located in more than 60 locations around the world. The company has solid cash flow and a strong business model. Analysts expect strong demand from industrial and automotive markets to continue in 2022. New applications and higher performance requirements seem likely to boost demand for Amphenol's products. The company announced its acquisition of Halo Technologies. That's good news, because Halo's products are complementary to Amphenol's existing high-speed fiber optics interconnect solutions business. Amphenol has developed advanced technology solutions for hybrid electric vehicles, and is working with leading global customers to proliferate these advanced interconnect products into next-generation automobiles. Amphenol's return on assets of 11% and return on equity of 25% are amongst the best returns of the industry. Its profit margin of 15% is amongst the best of the industry. Risks. Risks include worse than expected global economic trends, and lower than anticipated demand for Amphenol's products. Analysts see limited upside to margins in the coming quarters, and they expect competitive pressures to remain fierce. Government restrictions on trade will continue to impact growth negatively. Overdependence on communications industry. Although it has a wide and diverse product portfolio, majority of its revenues came from sales to the communications sector. Based on estimates for the next 5 years, Amphenol will show a small growth in earnings per share. The EPS will grow by 9% on average per year. The revenue is expected to grow only by 7% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.